right? Okay, section number 6. Section number 6, right? Okay. Section 6. Documentation. Section 6 is documentation. Section 6 is documentation. Let me confirm. 6 is documentation, 7 is transition issues, and 8 is double taxation. Perfect. 6 is documentation. So 6 is documentation. Documentation. OECD is, see, OECD has always been very, I mean, at least they mention it very upfront that one of the chief objectives of any TP policy should be minimizing the compliance burden, and documentation creates compliance burden. So that is why as minimum documentation compliance burden is possible, that will be good for the taxpayers as well as for the tax jurisdictions, right? So as far as documentation for simplified and streamlined approach is concerned, this SNS approach mentions making use of entries from local file. It mentions that local file entries they contain, because local file is created by a taxpayer for its control transactions, so it will already have number of useful information, accurate delineation of specific transactions. Fine, if there is any contact, etc., those agreements they will be present. And then if the jurisdiction or the taxpayer chooses to apply, or it is made to apply, then it also would have calculations pertaining to simplified and streamlined approach. So all these things would already be present in the local file. Fine. So documentation should be taken care of by this one. Certain information can also be made use. I mean, even master file may be referred. So it also mentions the use of master file for certain relevant information. Now, one point which is very important. This section mentions that whenever a taxpayer chooses to apply, taxpayer chooses to elect to apply amount via simplified or streamlined approach, then it has to give a consent in the local file, and this consent has to be for a minimum period of 3 years. So once you are in for a minimum period of 3 years. So consent for a minimum period of 3 years. So you are locked in for 3 years minimum. Unless of course there is a change in the qualifying transaction which would make that the qualifying transaction would no longer be in scope. Fine. So if nothing of that sort happens, then the consent has to be for a minimum period of 3 years. 3 years, right? So this is the documentation part. 7th, transitional issues. Certain issues, transitional issues. What are those issues? MNEs, they very commonly they restructure their businesses. TP guideline has a very elaborate, very interesting, very intricate chapter on business restructuring, chapter number 9. So transitional issues, they basically pertain to transitional issues they basically pertain to those BR issues, business restructuring issues. So you might find that a tested party or a distributor was earlier in scope, and now it undergoes business restructuring, and now post business restructuring it becomes out of scope. So now it becomes out of scope, right? This is possible. Reverse is also possible, that earlier it was out of scope, but now post business restructuring it comes in scope. Two possibilities: earlier in scope, now becomes out of scope post BR. But second possibility is that earlier out of scope, now after BR it comes in scope. Two possibilities. In addition to this, you may have a third possibility wherein the taxpayers, MNEs, they may want to make use, they may want to exploit or use or abuse, whatever it is, they may want to exploit or use or abuse this simplified and streamlined approach, and they may restructure their businesses in order to make use of this SNS approach. Fine. So they deliberately restructure their businesses in order to make use of this simplified and streamlined approach. In that case, that is also one of the possibilities. Third possibility, OECD says that in all these cases, and then the issue of losses as well. OECD says that in all these cases, taxpayers have to be very careful. Taxpayers have to be very careful, because this would imply this may invite audit from the tax authorities. Fine. So taxpayers have to be careful, because this may raise some eyebrows and this may lead to audits. Fine. So you have to be careful. Transitional issues, chapter numbers, section number 7. Last is tax certainty. Tax certainty, double taxation. I have already told you that this last section has connections with section number 2 in scope. So you have section number 8, tax certainty, double taxation. I have already told you that this has connection with section number 2, that is options. And I gave you an example that AE1, AE2, and then AE1, AE2. This is tested party, and in this case, this is tested party. Fine. Two countries. In this first case, both AE1 jurisdiction and both AE2 jurisdiction, they choose to apply this SNS approach. So they both choose to apply. There is absolutely no problem. So if at all there is any issue, pertaining to double taxation or some primary or corresponding adjustments, then A1, A2, they can actually rely on the guidance given in this report, in this SNS approach. Fine. So absolutely no problem. In fact, this is the one case which is actually under the scope of this guidance, right? In the second case, both the jurisdictions, they decline, that they will not apply this SNS approach. So in this case, they cannot apply. There is no question of relying on this simplified approach. They have to make use of the TP guidelines, the normal arm's length principle, accurate deletion, 1 to 10 chapters. Fine. So no question of amount B. In this case, TP means tested party. AE1 jurisdiction chooses to apply SNS approach, and this declines, the counterparty jurisdiction. In this case, tested party jurisdiction declines to apply this SNS approach, whereas in the counterparty jurisdiction, that applies. So in this case, OECD is saying that this cannot rely, and in this case, this cannot rely. These two parties who are choosing to apply the SNS approach, they cannot rely on this simplified and streamlined approach to say that their outcomes, their prices are in consistency with the arm's length principle, meaning to say that in these two cases, this jurisdiction and this jurisdiction, they also have to follow the remainder of the TP guidelines. That's it. So meaning to say that remainder of the, wherever there is a conflict, that is why I told you that only this jurisdiction is the fitting case for application of this SNS approach. Otherwise, everywhere you have to follow the remainder of the TP guidelines. Meaning to say that whenever you have MAP proceedings, mutual agreement procedure, MAP proceedings, or even further arbitration proceedings, here and of course here, countries have to choose the remainder of the TP guidelines. They have to choose the remainder of the TP guidelines, the normal proceedings, for the solving of the double taxation and the tax certainty cases. Fine. This covers the 8 sections of this simplified and streamlined approach. This covers the second part of the discussion. The third or the last part is what next. What next? What next? What next? Third part. What next? What next? What next? Now, India has made a number of observations. India has made number of observations to this simplified and streamlined approach to this report. The first observation, and see, mind you, I'm not in this video. I told you in the very beginning, at the very outset, that I am not going to give you my views, whether I feel it is appropriate as a tax practitioner, as a tax pricing consultancy. I have my own advisory and TP consultancy, but I'm not going to. I have also been published in ITPJ, and I also write papers. I'm a scholar, but then I'm not going to give you my views in this video. The scope of this video was simply what has been given, right? So I'm not going to say that whether objections of India are correct or not, but I'm simply putting in front of you what are the objections, what are the observations. So India is saying that the report is incomplete. That is why I told you that it's almost final but sort of not final. So the report is not complete. In fact, India has used that it is an incomplete report. Why it is an incomplete report? It is an incomplete report because there is no definition. There is no definition of low capacity jurisdictions. No definition of low capacity jurisdictions. No definition of qualifying jurisdictions. No definition of low capacity jurisdiction. No definition of qualifying jurisdictions. And no list of LCJ. I mean, who are the LCJs? So no definition of LCJ, no list of LCJs, and no definition of qualifying jurisdictions. In addition to this, India further objects by saying that for the purposes of scoping, qualitative scoping criterion that is missing. So missing absence of qualitative scoping criteria. You only have, as of now, a quantitative scoping criteria based upon annual operating expense. So there is an absence of qualitative scoping criterion. In addition to this, India further objects by saying that cap and collar mechanism should not be based upon operating expense. So cap and collar mechanism should not be based upon operating expense. Cross-checking mechanism, not. I mean, India has objections. Operating expense should not be used as a cap and collar mechanism. Fine. And then further, there is a median variation of plus minus 0.5%. That is also being objected by India. Right. So these are the objections. OECD on its part is saying that definition of LCJ and list of LCJ as well as the definition of qualifying jurisdiction. OECD says that we will bring out the list of LCJs, definition of LCJ, qualifying jurisdiction by 31st of March. So that is why what next. So by 31st of March, they are saying 2024, they are saying that they'll come out with a list of LCJ as well as definition of LCJ as well as definition of qualifying jurisdictions. Right? What else? And yes, this simplified and streamlined approach is supposed to come into operation, is supposed to take effect from January 2025. January 2025. So there is a time period of 10 months. Fine. That's it. I believe it's quite a comprehensive summary discussion on this report. Fine. And I do plan to bring up one more video on, especially on scoping criteria, qualifying transactions, scoping criteria, like section number 3, as well as the pricing methodology in section number 5. Fine. So thank you so much for watching, and hope you would have gained a lot of insights into this report. And keep watching. Do subscribe to International Tax Academy's YouTube channel, and for ADIT preparation, join on the number. You can make queries, and for any inquiries for joining, on the number given that I have already shared. Fine. So thank you so much, and till next time, keep the faith. Thank you.